Happy Friday, everyone. I wanted to hop on and actually go over a few different things in the market and some ways that you can win. One, if you're a real estate agent and you're trying to help your buyers and get into contract. If you're a real estate agent, you're trying to help your sellers maximize opportunity in today's market. Because literally, as we all know, if you follow the real estate or mortgage industry, the market from January till July, totally different. So today I wanted to go over a strategy called a seller buydown. Right now, if you're a home buyer or someone out there trying to look to buy a home, or if you happen to have a friend or family member that's looking to buy some real estate, this could be a really great way for a phenomenal opportunity to get into a home with a discount and win in the short term as we all kind of wait for rates to come back down. So let's go ahead and take a look. I'm going to be looking at this screen. You'll see it right behind me. This is for educational purposes only. So the rates, the details are all a little dramatic, and they're not completely accurate in today's market. Actually, they're not accurate whatsoever in regards to the rate itself. But I wanted to show just what it looks like if you focus on a seller buy down versus a price reduction. Let's take a look. So today, one of the biggest things that we're seeing is people are looking, hey, the market's shifting, prices are coming down. Look, nobody wants to see a 20-30% price reduction. Here's the biggest reason. If you're a home buyer, you're going to lose. If you're a real estate agent, you're going to lose. If you're a home seller, you're also going to lose. The reason for that is there is so many people out there with cash to pick up investments at a dip, just like you would if the stock market took a drop, right? So if the stock that you know is at $1,000 drops to $700 a share, and you know that it's going to come back within some period of time, you're probably going to go and swoop up a lot more at 700 than you would at 1,000. It's the same concept with real estate, just a little bit different because obviously we're talking significantly higher price points. But it eliminates a lot of the day-to-day, the average American, the average person to come in and pick up some real estate. So let's dive into this number. This first scenario, we're going to be talking about a $500,000 purchase price point, right? Well, let's go ahead and change that so we can actually see what the heck we're doing. So we're going to be talking about a $500,000 price point right here, okay? The biggest thing here is, let's say in this scenario, it's someone putting 20% down. So they're putting down $100,000. Let's, again, for educational purposes only, we're looking at interest rate, say about 6.7%, way above market average right now, but just wanted to show. This is going to be a 360-month term, so a 30-year fixed. You'd be looking at about a payment about $25.95, give or take, right? And again, cash to close is also estimated. We don't have all the fees. So the idea was just, again, educational. So you're going to see, here's your payment. You're taking all the accounts. You're going to pay about $160,000 on that house in the first 5 years of owning it in pure interest, right? Let's say we look at a 10% price reduction, $40,000. Most people are like, woo, I paid $40,000 less than the other person. Here's a couple of things to think about. One, you don't really want to buy a home that just had a major price reduction. So you just created a dip in the asset that you are buying, right? As a seller, well, it hurts the seller. They don't want to take a $40,000 deduction on their sales price, right? Maybe they have a $200,000 loan. That's going to take away $40,000+ out of their pocket again, right? And as a real estate agent, you're going to make a lot less money buying or selling that piece of real estate. So in a across the board winning situation, we wouldn't want to do a price reduction. You guys can already see the screen here, but I'm going to go in some details. So if we take a 10% price reduction, that's $40,000. You're like, sweet, I bought the house for $460K. I'm going to get a loan of $368. So notice that net difference. Price reduction was $40, but the loan only changed $32,000, right? On 20% down, a price reduction, you only see the net difference of the actual deduction and your down payment amount, right? So if you're doing 10% down, you're going to see even smaller deduction in your loan amount. So it's not dramatic. Let's say same interest rate, right? 6.8, same loan. Oh, man, I'm going to save $207 a month. That's awesome, right? You're thinking, great, I'm going to save about $13,000 in interest. It adds up. Absolutely. Is it a bad deal? No. Is it a long-term plan that's going to help us all win? As a buyer, a seller, a realtor, it's not as well. Let's look at the rate buy down. Now, again, generic, we don't know the exact numbers in the scenario. keep the price at $500,000, right? But you're still putting down 20%. So as a seller, let's say it costs the buyer $10,000 or $15,000 to bring that interest rate down to what you see here, 5.7. So a 1% interest rate deduction. Well, one, you didn't deduct your price by 40, right? So you only took a $10,000 or $15,000 price hit by offering a seller concession, a seller buy down, or a closing cost credit to that buyer, right? So one of the biggest things here is you're going to see, okay, well, I'm still taking a price reduction. Well, kind of in this market, if you're priced at 500, you're not getting hits and it's 2 or 3 weeks in, you're not getting an offer at asking anyways. Buyers have the power now to negotiate. 6 months ago and for the last 2.5 years was not a thing. Now, absolutely, right? And so we're seeing homes that are priced properly in the Bay Area and Phoenix, Arizona. They're priced at market value, but kind of what market was 6 months ago. And they're sitting for 20, 30, 40 even days I've seen, and they should be selling. It's a different market. So staying on top of this is key. Now, as we go down this, we look at the numbers. The buyer's now going to save $260 a month and a ton more in overall interest, right? So one of the biggest things there is if you're a seller and you're not going to try to take a 10% price reduction, you're actually, the buyer wins with a seller credit. The seller wins by not giving as much money, and both real estate agents win as well. The fifth one of that is the market wins. You win as a buyer big time, right? So now there's not a home that has a major price deduction. Now appraisers will see and call out if there is a price seller credit to the buyer. They'll be able to adjust a little bit, but it won't impact your purchase. It'll impact a little bit of the market, but we kind of have this normal, come June, July, August, there's always a little bit of a dip in the market. This is normal. It's just we're seeing it maybe a month earlier than usual. So let's go into it a little bit more into the big time savings. Monthly payment, we talked about that. The interest over 60 months. Now, again, this is a $500,000 loan. Imagine if it's $1 million, $1.5 million, $2 million, depending on where your marketplace is, what that price is going to be, right? So they get a deduction of purchase price, save $40,000. They save $10K in interest. Nice. But that deduction in interest now saves them the biggest thing, or price over here, sorry, interest here. So they'll save twice as much by a 1% interest rate. And 1% interest rate is going to be in between 1 and 2 points, depending on the lender, the margin, and the client's buying situation, right? So if that's the case, and let's say it is 2 points, 2 points on a $400,000 price point or $500,000 price point, it's 10 grand. Instead of you paid 10 grand as a seller, instead of $40,000 loss, you still are getting $30,000 in your net bottom line once you sell that property. Second biggest thing is going to be the overall interest that you're going to pay. In 15 years, if you were to keep the loan, highly unlikely in today's market. Anytime we look at a recession, we'll do that. Now check out my real estate rates and recession video that I have on my YouTube channel. I'll post a link in this one as well. And that's what also going to show you what's going on, what's the trends of the previous and coming days, kind of what we're expecting in real estate for rates. So they're going to pay $360,000 in interest over 3 years, 15 years with no price reduction. With a price reduction, they'll save about 30 grand. They're going to save $60,000 over 15 years by that interest rate reduction. That's assuming we don't do an interest rate buy down. We don't look at any refinances. It's one of the biggest things. So I wanted to touch base today about the seller buy down scenario instead of seller reductions in prices. If you guys have any questions, if you're looking to buy real estate, if you are a family member looking to buy, or just have a conversation, please reach out. Love to set up a consultation just to talk about what's going on. If you're a real estate agent, same thing. Let's think about strategies in different ways. If you would like to have some of this information at maybe an open house or something like that, just keep the mind, keep the thoughts open. Hope everyone's having an awesome Friday. Guys, have a great weekend. Take care.